In the equity markets today, the Dow finished up on the day really near its highs after showing leadership all day long. The Dow led to the upside throughout the day. For most of the day, the Dow was really the only positive index of the big four, leading and then actually rallying later in the day. The only point in time where it was down, we were down 17 basis points when that June Dow futures contract got to about 32,670, high 32,938, and that's essentially where we settled. Couple of ticks below that, but it was basically a rally in toward the end of the day. That settled near its highs. Now, bond yields on the long end especially steepened again today, but fell later in the day. We'll use the 10-year as the example. It was actually up over 1.68% in yield, and later and toward the end of the day, got down to about 1.62%. So that was a pretty big swing, getting up to highs we hadn't seen for about 13 months, and then falling back off to lows that we hadn't seen unless you go back to the beginning of this week, late last week. Falling off that many ticks, 5 or 6 basis points on yield is a big move, especially intraday, especially late in the day. That helped the other indices get up and rally in toward the end of the day, where the Russell actually ended up surpassing the Dow, being up about 0.75%. All of this happened after the FOMC meeting. The direction was not decided in the Dow, honestly, until post-FOMC. The Dow was actually only up 7 basis points when the announcement came out, immediately rallied, pulled back a little bit again, and then just rallied the rest of the day. And we got that new high post-announcement. We had a new high in the Dow. Unlike the other three, we didn't get them in the other three, but the Dow had that new all-time high and that new high for the day at 32,938, just a few cents now, or a few ticks, whichever way you look at it, away from 33,000. The FOMC meeting was dovish in general, as Jerome Powell in the press conference and the Fed in the statement said they weren't really making any adjustments, basically talking about being comfortable with the way things are happening and not worried about inflation, because they think inflation is going to rise in 2022 and then fall back off again, and they won't have to act at all. That's essentially paraphrasing what Jerome Powell said, and the market seemed to take it like there was no inflation coming. We'll see if that narrative holds up.